despite the unrest, despite still coronavirus being there, a lot of equity markets are just going up and up.
It's astonishing. We're not far short of, in fact, we're slightly less than 10% short of the peak on the S&P 500. That's an astonishing move. I mean, we're solidly above 3,500, which is quite remarkable, because I thought 3,000 was something we wouldn't see again for quite some time to come. I mean, basically what's happened is that the authorities are throwing everything at the problem. We've got zero interest on us. We've got a huge amount of liquidity being pumped in by central banks. And basically, if you want returns, it strikes me that you've got no option other than to buy equities, given where bond yields are now. So it's, in many respects, it's a replay of the story that we've been seeing over the course of the past 10 years, with markets being ramped up by the actions of particularly the monetary authorities.
Peter, will fundamentals in the economy actually at some point catch up with what we're seeing with equities? Or are equities due a correction because they need to catch up with the fundamentals?
Well, I think really it's a question of, the equity markets do need to catch up with the fundamentals. And, under those circumstances, you might argue there is a strong case for some form of correction. And I know a lot of people have made this case over recent weeks. What I think causes me to be a little bit more wary about such calls right now is that over the course of the last, decade, really, analysts, including myself, have said, look, markets are out of line with fundamentals and they need to go lower, and they haven't done so. And the reason they haven't done so is because there is a wall of money out there which continues to come into equities and support them. So you might see a little bit of a wobble here or there, but it's not really an environment in which I would expect to see a huge correction in equities, such as we saw in March. This is, potentially there'll be a wobble here or there, but I think the trend looks pretty good at this moment.